Okay, good morning. Welcome to Trading with Goals. I'm going to start. So I'd said we'll talk about the bull flag. So the bull flag, we have a bullish or a bearish flag pattern. It's a continuation pattern, and it's characterized like a flag post. So you have the pole and then the flag. So the pole usually is the first movement, either when it's in terms of a bullish flag pattern, is you get the first impulse movement. So you get the first breakout, and then you get a pullback, which is a retracement, and then you get continuation. So it's a continuation pattern from the first move, then the pullback. So the first move, you can get higher lows, higher lows, higher highs, and then you get a pullback from the higher high, lower low, lower high, lower low, lower high, lower low, and then you get a breakout to break the previous high, and then you get a continuation. So the flag pole looks like this. So the first move up, this is the pole, and then the pullback is the flag. Okay, so the flag looks like the flag facing down, and then you get the continuation. So it's a continuation chart pattern that consists of two waves and resembles the shape of the flag in technical analysis. Okay, so this one for the bullish one is a signal that the price will continue with the bullish trend. Now, it's very easy to identify the flag pattern on the daily chart. So what I want to show you guys is how to get the same concept in there on a lower time frame for people who usually your day trading. Okay, so the criteria, the pole of the flag pattern must indicate the impulsive wave. So the impulsive wave is this moves up. So we have the higher highs being created, and then after that, you get the retracement. So you have the impulsive move, you have to get the move up, and then you get the retracement wave. So this is where the flag is formed. When the retracement, you have the retracement, the pullback, and then after you get the breakout. Now, that pullback has to remain above 50%. It should not. So the other criteria, so the breakout channel must be the big body bullish candle, the breakout channel. Okay, so we have that, we have the flag, and then we have the breakout where you have now you break above the previous high and then continuation up. Now, when this, whatever stock you're trading, whatever time frame, the retracement has to remain above 61.8. If that retracement is 50%, it's no longer a flag pattern. Okay, that's the criteria. So the price should not retrace below 61.8 Fibonacci retracement. So this flag pattern is good to use together with the Fibonacci levels you have to draw, or you can use for trading view. The indicators are there. For me, I love drawing. Unfortunately, I can't draw on my trading view. I draw on my Weibo. So the retracement, you guys know when a stock retraces 50%, that's not a good sign. So for you to get a continuation, the retracement has to stay above 61.8. Okay, it should not retrace below 61.8. If the price retraces to 78.6, then it means the bullish trend is weak. So we skip that setup. It has to you have to use the retracement pattern to see this. When this, you can actually do like an eyeball. When you see the first move, the flag, the pole, the first movement up, if you just see the pullback goes almost halfway, that's no longer a flag pattern, okay? So that's the criteria you have to look for, the flag pattern, whether you're doing bearish or bullish, okay? So you have the impulsive phase and then the retracement, and then now you get the breakout. The impulsive is where for a bullish one, you're creating higher highs, higher lows, higher highs, and then the retracement, you're creating lower highs, lower lows. If it's a bearish one, the impulsive, you're creating lower highs, lower lows, and then the pullback is higher low, higher high, okay? So it's the opposite, is the retracement, it has to stay above 61.8, okay? So after the impulsive phase, the retracement phase must happen or after the retracement phase, the impulsive must happen. So it is the impulsive move first and then retracement, and then you get the breakout, okay? Whether it's a bullish or a bearish trend. So for today, I'm only going to talk about the bullish one because I know we are bearish at the moment. We are getting some kind of pullback. So that's why I want to show you guys these on a lower time frame. Okay, so the impulsive wave, this is what you're seeing, the retracement, it has to stay above 61.8, and then you get the breakout. So the reason I'm doing this is because I'm expecting us to have some pullbacks, bullish pullbacks, and I'm gonna show you guys this on 15-minute chart. You can see a flag on any time frame, even 1 minute. If you want, you can see a flag on a flag pattern on any time frame. On the daily time frame is the easiest to detect. Okay, so when do you enter? You have this first move, then you get the retracement. You want the retracement, you can draw a channel. Okay, the retracement, you can draw a channel like what you guys are seeing here for those people who are good in drawing, or you can wait for a change of character. Okay, so the previous lower high level, when you have a change of character, that can be your entry. And then some people wait for the break of the previous high. For me, I feel like you can wait too long, but that's another way for confirmation. And then you get continuation. Of course, you're using now Fibonacci for exit. The first exit should be 1.6. So 1.68 is above 100%. So after 100%, you have 123, 138, 150, 168 percent. If you want in decimal, it's now 1.68. So that's your first exit. Then you can, if you have further continuation, you can exit at 2.68, 3.68, 4.23. Okay, I'm sure whatever I'm talking about is not Greek because you guys use Fibonacci levels. Okay, so the stop loss. So stop loss, place a stop loss below the lowest level made by the price after the breakout of the trend. So this is the lowest level. If I put my cursor, I don't know if you guys, this is the previous lower low is the lowest level. That can be your stop loss there. Okay, so after you've entered on the breakout above the previous lower high level or above the channel, this is the channel. You can draw these two lines on the retracement wave. Okay, take profit, close half trade at the last higher high made by the price, or you can apply the Fibonacci tool that I'm talking about. So the Fibonacci, you can draw, you can use the retracement tool. So it means you can take from the high here to the low, or you can use extension. So you take from the break, the beginning of the pole, you go up and then the pullback, then it will give you the rest of the levels going up. We'll draw a bit on Webull and see. So you can use Fibonacci retracement. So from this high level to the lower level of the retracement, or you can use Fibonacci extension, which it means the low, swing high, and the pullback, and then it will give you the levels going up. So you want to know your exit levels. Okay, so like here we have you start taking profit from 1.27, depending on the which settings for your retracement. So we have 1.68, 1.78. So that's the level above 100. So when you hit the high here, this should be the 100 because you've retraced back to the previous high level. Okay, so this is your 100%. So anything above it, now you can take profit above the 100 because you've broken out above the previous high. You can start taking profit. Okay. Risk management, risk only 2% of the total account balance per single flag pattern trade. I'm sure right now everybody knows how their risk to reward ratio is. Okay. Now, whenever you see a stock breaks out, we've seen that and we'll see examples, and that stock gives you, so this I'm talking about. Okay, let me go to the chart. Okay, so this is a daily chart for SPY. The wave, the impulse. So this is the impulse. On the daily, it's very easy to identify a flag pattern. It's very easy on the daily. You have the impulse here when it's going higher high, higher low, higher high, higher low, higher high, higher low. Then you have the flag where you have the pullback, and then you get the breakout. So this is the breakout. So if you're using your Fibonacci tools, you can put from, so this is the high, this is the low. If you want to get the retracement, you take your tool. I don't want to draw here because this one gives me trouble. So you draw from the low to the high to the pullback, you get the rest of the levels up. On the daily, it's very easy to detect a flag pattern. Now, if you are having trading view, you're paying the one for, I don't know, is it the Pro Plus or what? The one that charges $50 a month. I don't use that. The one that charges $50 a month, you can get the indicator, the flag. So this one, you can get the bearish flag and the bullish flag pattern, but you have to be on that what is it called? I use the plus. You have to be on the premium. The premium is the one you pay, I think, $50 a month. Okay. So on the premium, you can be able to see those. You see here, it's showing you the head and shoulder, the flag. It can give you those patterns if you want. So you have to be on the premium account for TradingView. But you can easily just see the bullish flag pattern on the daily, very easy on the daily. So I want us to focus on the 15-minute because I want people to be able to know which stocks to trade for continuation based on 15 minutes. We see a stock trending up on one day. Let's say you missed the pole break, the first movement, you missed it. You don't want to miss the second movement. That's what I want people to look at. Okay, on the daily, it's very easy. If you are very good in patterns on the daily, very easy. I don't want to focus on that. I want to focus on the 15-minute today. Okay, so on the 15-minute, mostly the flag the pole. You want the pole on the first day when you have the first movement. You want the pole that day on the 15 minute, you're getting almost a whole day trending up. Okay, so this is you're assuming this is the pole. You're either getting I'm focusing more on the bullish flag pattern today because we're anticipating some pullback. Okay, the bearish is the opposite. Okay, so the first movement, you're getting such a move, and because it's 15 minutes, you don't expect the retracement to be a lot. Sometimes you can barely see the retracement. Okay, you don't want the retracement to be if you're getting the first move up and then that day you get an inverted V pattern, that's no longer a flag pattern because it has retraced back to almost the low of the pole. Okay, so assume the first move up to be the pole on 15 minutes. So this is a continuation pattern. It means if you expect this is a pole, then you're getting the pullback. This is the flag barely on 50 because it's 15 minutes. Then it means the next day you're expecting some breakout. So if you missed the first day, you don't want to miss the second day. So this is where I've seen there are few people who take advantage of this. If you guys this lady called McKenna. McKenna is very good in taking advantage. I don't know if she knows she's using the flag pattern. So even if you miss this day, you don't want to miss the second day. So you get that. We've seen costs, the same thing. So you want the first day. You're not getting an inverted V, you're getting a breakout like here. Even if it's not taking the whole day trending up, but you get this move, you are assuming that's the pole. Your bendera. In Kenya, we only are, in school, we used to raise the flag on Fridays only. I don't know why. Okay, so in America, even anybody can put their flag in their homes. In Kenya, that's illegal. So this is the pole, okay? The bottom of the pole, this is the top, and this is the flag. So whenever you are seeing such kind of it's kind of going down or squeezing, you're assuming that's the flag because you have a high and then you have this pullback. It doesn't, this is 15 minutes. You don't want you don't want this. Whenever you're seeing this move, so we have this, if this move happens and the pullback goes up to 50%, so you can be drawing. I should go back to, let me open my Weeble so we draw. If that move is pulling back, almost giving you an inverted V or 50% retracement, that's no longer a flag pattern. Just know that you'll not get a continuation from that. Okay, so you have to be, this is a 15 minute, we're talking about 15 minute. For those people who day trade, this is the best strategy to use. Okay. Okay, so you take note of the first, even if you missed the first move. So let's say you missed this day, you didn't trade coast on the 8th, but it created this pole, and then you have this kind of a pullback. You want to see if the next day you can, even without drawing the Fibonacci, you can just eyeball and see this is barely a retracement. any retracement that is not going below 61.8, that's not a retracement. That means this, you're expecting a breakout. So the next day you're playing, you could have played the same cost, okay, from 837 to 857. So it's giving you 20 points, okay? So let's say you missed this day. You don't want to miss the second day. So you're looking for something like this. Barely, it's like a flag is looking, the flag is looking down. That pullback is barely a pullback. The next day you're expecting a breakout, okay? So the first candle, because it's 15 minutes, the minute you get an indication when this stock gives you a decision, especially when it breaks above the previous high, the previous day high, then you're getting your confirmation, you're going to get continuation. So you're trading this stock on the second day, okay? So that's cost. Now when you're drawing the Fibonacci, okay, if you want to see the retracement, okay, so you're drawing from the bottom of the pole to the top, okay. So if you see, this is not even, I don't know, we don't even, this doesn't even look like a retracement, okay. So this one doesn't, so this is the 100, this is 78, 61, 50. I don't know, my Webull is not showing, okay. So it doesn't even go to 70, 78, okay. So this is already showing you this, there's a possibility the second day you're trading this breakout, okay. So if you want to know the exit, you can draw an extension. So you come here, you can draw an extension. So it means this is the low, this is the high, and the pullback. You see the lowest point of the pullback, this doji. Okay, then you have your exit levels for the next day. So we had 8, I have too many things. So this is, it broke this 856.17. So when you see it's closing and it's closing on a strongly, you can leave a runner for the next day. So this is 0, 23, 38, 50, 61, 78. Okay, so it can go all the way to 870. So you're using either, I like drawing the extension because it caters for the pullback. Then you get the breakout levels for your exits. Okay, this is based on 15 minutes. For daily, it's another, I don't want to talk about daily today. I'm talking about day trading using the 15 minutes and knowing to trade a stock which had a breakout the previous day. So I want to look at Lily, especially stocks that have ER, okay? Stocks that have earnings. The ones that break out during pre-market. Okay, so you have this move from 760 to 882. You want to see the retracement. Okay, so retracement, this is 178, 61. It almost touched 50%. Almost. You don't want it to touch 50%. If it's touching 50% retracement, it will probably not be a good play for the next day. Okay, so you have that. It has to show you it's not going 50% below 50%, because that's no longer a flag pattern. Okay, then the next day, and you can see if it breaks below 61.8, you might not get a very good move the next day, and that's why you're seeing Lily. It didn't give us that move like compared to Coast. So we had this move here. So you can do your extension. You want to see the retracement first, and then you see the extension after pullback. You don't want to work. You have to do the job sometimes when if you want to make this money. So extension, sorry. So this is the second and then the pullback. Okay, if it goes close to 50%, it will not give you the best move, but still this was a good play. The next day we went from 856 to 908. Okay, so you're seeing that, and then you can, this is if it's closing strongly, this you can get continuation. So today, yesterday, I'm sorry, Friday, this can be a pole, then this is the pullback, and then you're expecting a breakout. So we didn't get a good one here, but we got a good one here. So this can be the pole, then the flag, and then the breakout. So every day you want to find stocks that if you miss the first move, you don't want to miss the second day for the breakout, especially if you're getting a flag pattern. Okay, pan W, the same thing. So we got this, the pole, barely a pullback. So you draw from the bottom of the pole to the top. Then the pullback, if it's not giving you, it's not going to 50%, then it means this is the flag, and then you get the breakout. 15 minutes. If you are getting a whole day trending up on 15 minutes, you have to be making more than 1,000, even if that stock the previous day was trending up. This is a continuation. And if it's a continuation, it's a breakout. You can see we came from 315, went all the way to 333, giving us over 15 points. Okay, so that's what I want people to be looking at. Now, when you have a stock, let's see. Good morning. Oh, you're heavy. Okay, so this is the example I wanted to give. If you see this, we got the breakout. So we're assuming this is the pole. If this pole comes down almost to the bottom of this, you're not going to get that. This is no longer a flag pattern. If it's pulling back all the way, even back to the beginning of the pole, or almost below 50% retracement, you might not get the same flag pattern. So you have to wait another day. So this is what you get, another day, this move. So we want to see ISRG if it's gonna give us the breakout pattern. So we got this move, we have this pullback. So we want to see today if it's gonna give us the breakout. Okay, so if you don't get a flag pattern, it means because this stock gave you an inverted V, there might be another opportunity to get the pole. Okay, and then you get the flag, the pullback, and then the breakout. This is just based on 15 minutes. I'm not talking about daily. Like I said, today I'm not talking about daily. Very easy to know, to detect the daily flag pattern on the daily chart. Okay. So whenever you see a stock is giving you inverted V's, that's not a flag pattern. Leave that stock. It's probably going sideways like LMT. Okay. You see this? You got this move, but when it pulled back, you can clearly see this is almost going back to this beginning of the pole. So this is almost over 50% retracement. And you can see the next day, it's giving you sideways move. Okay. And go back when it was creating 52-week high. Now, this is very conducive also for stocks that are creating 52-week high. when you are seeing a stock is barely pulling back after a move up, then it means there is possibility of having continuation, going back to when it was trending nicely. Okay, so here we have this move, we have this flag pullback, and then we get the breakout. Okay, we got this move up, the pullback, slight pullback. This didn't even do barely a pullback. Then we got the breakout. Okay, so this is what you want to see. Any day you're having a stock breaking out, go look at the pattern on the 15 minutes. If you're seeing it's going sideways and a slight move down, you're going to get a breakout on that stock. That's the stock to trade the next day. Okay, that's the stock to trade the next day. And in most cases, you can leave a runner for the next day. You will get the breakout. In most cases, if you got a good flag pattern the previous day, you will get a whole day trending up, and possibly you can leave a runner. Okay, I hope that's clear. I'm talking about 15 minutes. So if you are on the premium on TradingView, you can, if you want to pay, you want to pay to get that, you can. But for me, it's very easy to eyeball this and see this is clearly, it's giving you a flag pattern, but it's clearly not a deep pullback. So this will potential for the next day to get a breakout. So the pole, the flag, the breakout. Draw Fibonacci extension from the move up to the pullback, you get the exit levels. But in most cases, you leave a runner for the next day, especially when you have a strong close like here. You're trending up the whole day, you can leave a runner. Okay, that's what I wanted to show you guys. Read that article. There's so many, you know, if you Google, go to YouTube, but mostly people are talking about the daily chart. You can see the flag on any time frame, 1 hour if you want to see it, 5 minutes. There are people who even do it on 2 minutes, 1 minute, but I'm focusing more on the 15 minutes based on a stock that previous day gave you the pole, and then you want to catch the breakout on the next day. Okay, if that stock gives you an inverted V pattern, forget about it. It can start the next day to give you a pole, and then you get the breakout. So those are the criteria and what I want you guys to look out for day trading. 15 minutes chart. This is not daily. That's why I'm not focusing on the daily. Okay, so especially when you have stocks creating 52-week high, or when you're expecting stocks to pull back. Okay, so like now we had those massive drops, pull back 3, so here we have a higher high, and then we have another higher high, and then we have another higher high. So this gives you 3 higher highs. So it's done what you're supposed to give you based on that flag pattern. You can get continuation depending on if this stock is giving you 52-week high. You're looking at, oh, this is not even giving you a slingshot pattern, expect another breakout. But when it's giving you an inverted V pattern, please don't expect a breakout from that stock. Okay, so that's what I want you guys to look at this week as we're anticipating those pullbacks. Those are bearish 1 to 3 bearish pullback, meaning we're supposed to create 3 higher highs. So 3 higher highs, you can see from here, like LMT, I think here it was going sideways. Then we got a higher high here. If you miss the first one, you don't want to miss these 2 days here, and then you can leave a runner on the next day. Any question?
Virginia, I joined late. Where do I get the article from?
I posted it where I post the link for the meeting.
Thank you.
In the members announcement. Who is asking the question?
It's me, Atish. I've inboxed you.
Atis.
Yes, ma'am.
So kufanya homework.
Kufanya homework in my Lakini I've inboxed you.
Okay. Okay. So very important. The thing is, when you're getting such a play, it means you can comfortably hold on to that play for the next day. You're not rushing. Especially this is very good for day trading, and you can leave a runner for swing. Okay.
Virginia, quick question.
Yeah.
I don't know if you answered it, but when we're on the 15-minute and we're looking to get out of our play, what fib 618.5 should we be looking at to get out if it comes down?
Say that again.
When we're using the Fibonacci, you said when it goes up, we're looking for the breakout. But then when we put our extensions on and let's say it's starting to come down, what I guess Fibonacci numbers are we looking for it to touch before we say, okay, we have to cut the runners?
If it's if you got the flag pattern and this pullback was barely a pullback like here, you should not be scared of this, that it starts coming down. But if it does, so this is what I said, you can draw your Fibonacci extension. This is the extension. So you take from the bottom of the pole to the top and the pullback, okay? It will give you the exit levels here. Like you can see this one. So this one starts from 0, 23, 38, 50, 61, 78, 100. And then this is 100, 1.23, like that. That's why you can start taking profit from one. If you read that article, it says from 1.27, 272. Okay, so from this level here, so draw this extension. The other thing, if it's a stock that is pulling back, you can look at where did this stock come from. Now, this one was creating new highs. That one does not apply. For stocks like this week, we're expecting, let's say for SPY, we're expecting a pullback. You also want to see where did that stock come from. So it's better when you're looking at on the 1 hour time frame. Okay, you're seeing here how this flag thing works. So this is the pole, the beginning of the pole. You have a shallow pullback, then you're getting the breakout. You want to see where that stock came from, especially for the ones that this is. So here's SPY. Let's say we're getting a flag. When is this? I'm in July. Ooh. I can't. Somebody here chewed on my mouse, and I keep forgetting to buy a new one every time I go to the store using this pad. Okay, so let's say this is a pole, then this is the flag. We had the pullback. You want to know, so apart from drawing the Fibonacci extension, so let's say we draw it here, extension. So this is the bottom, this is the top, this is the pullback. Okay, so let's say it's giving us these levels up to 547 here, and we know SPY came from 565, or is it 566? The high. So always also use the previous high. So this is the thing, Nikki, is it Nick? Who asked the question?
Yes, it's Nikki. It was Nikki talking.
Okay, so this is the thing. If it's a stock that was trending down, like we've seen SPY, tech stocks, and semiconductor stocks, you want at least 3 higher highs. So if you miss the first day of the breakout, the pole, You don't want to miss day 2 and most probably day 3. So it has given you 3 of those higher highs. So you have the first higher high, the second one, and then you get probably the third. So from there, from the extension levels, probably you'll get SPY. So here SPY still has room to go to 540, 39, 543, 547. If it's a good flag pattern, Nikki, you will not have to worry about your exit. Okay? It will give at least, it's supposed to give you at least a whole day trending up, and a possible the next day, you can leave a runner for exit. This can go on for 3. We want a pullback, 3 higher highs to 6 higher highs. But the minute the pullback, sorry, now I'm mixing. So the minute you're having your flag is doing more than 50% retracement, then you should not be, you should be relooking at your exit. Okay, that's why Lily didn't give us a good move, because Lily pulled back all the way to 50% retracement. So when it's giving you that, it means you need to start again looking for a pole, because the day it gave you a pole, the next it pulled back up to 50%. You want a day when you get the pole, you are barely getting a pullback. The flag is barely a pullback. That's why we are looking on 15 minutes. Does that make sense?
Yes, thank you.
Yeah.
Virginia, I'm looking at Netflix. Netflix would give a good example of that pullback on 15.
So on which day do you have your, oh yeah, yes. So this is your flag, the pole. So we got this pole, then you get this flag. As long as it's not going up to 50%, you'll get the breakout. Okay, so here with your breakout, you can get in, take some profit, and leave your runners. And you can use your Fibonacci levels. I hate deleting my lines because they mean something to me, but you can now you see, like here, whenever you're getting an inverted V, that don't consider that your pole, because this does not apply. It doesn't give you that setup. This, you can't call it this is a flag, because it went all the way back. Always remember, I'm talking about 15 minutes. This is not daily, because I want us to be able to know what to day trade the next day based on this bullish flag pattern. Okay, so if it's doing inverted V, that's no longer the setup. Let it give you a pole again. So this one, we got a pole, and then this is the flag, and then now we want the breakout. Okay, so this is a good example. So if you guys are able to do this the way, Terry, the way you've been able to identify, you can be identifying plays for the day, next day, very easily. You'll not be fighting, Nikki. There will be no instance of you saying, oh, I got in and then I was caught in the, it turned, my calls turned red. No, that will not occur if you catch this, the flag. This is very important. It has to stay above 61.8. If it goes all the way to 50, it means you have to wait for another pole setup. Okay.
Yeah, Virginia, on that same note, I'm looking at Cover. Cover has a good play today. So maybe
Cover gave us a pole on Friday, right?
Yeah, and the pullback is perfect for a bear flag.
So this one, we got the pole, barely a pullback. So this is another play that is possible for a breakout. Okay, you can use your Fibonacci levels for exit, or you can look at where did this talk come from? What is the story from this poll? Was it coming? You can look at the daily, the 4 hour, where was it coming from? Okay. You can even see here, like I said, even on 4 hour, you can get the setup. You see, this is the poll, this is the flag, and then you got the breakout. So if you're looking whatever time frame, like I said, there are people who even trade flags on 1 minute. You can get it on any time frame. The higher the time frame, it means you can get a bigger move out of this. You can see this one. This is the 4 hour. So this move started on the 5th, the flag, the pole, and then we got the flag here, and then we got the breakout. So you will not have missed this breakout, okay? So this is what now you're seeing here. It has to be the bandera, the flag has to be like a straight, you know, the pole. It means you get a good move for the pole up, and then you get the flag and then the breakout. Okay, so I want you guys to start looking not just on 15 minutes, even on 1 hour, 4 hour, and daily. Okay, but I know people have trouble finding plays for the day. Okay, the market is now confused. We have been trending down. We are having that phase of calm after a storm. So you want to see when we get that one day of the pole, you don't want to miss the next day. Okay, if you're catching it on this on 4 hour, on 1 hour, you will probably get a swing play. Okay, so this is a very good. So I hope this is opening you guys, opening your eyes on how to identify a stock to trade. You'll not miss making some 5K a day like our friend McKenna. Okay, sawa sawa. Any other question? So I've given stocks including SPAN, QQQ, still semiconductor stocks, they're bearish. The trend has not changed for them. There's not even, I think, I don't know, there's only SWKS, and they are not even in the lotto list. They are still in the tired of being bearish, and some are, you know, are bearish possible pullback. So semiconductor stocks, even QQQ is under bearish possible pullback. SPY this week is in the lotto list. We have some ERs, and on Friday I forgot to mention Mindy. Oh, I hope you guys never forget Mindy. Mindy is always a good, always remember Mindy when Mindy, ILMN, LGN, they're ERs that report mostly. Mindy always reports on Monday, and you see this one gave us a 4 hour. We got this move, the pullback, and then the breakout. Okay, now I'm talking about the bullish. The bearish is the same thing. So bearish, you have the move down, the pullback, and then the breakdown. The same thing. So for the bearish, you don't want to get a V pattern. So for bullish, you don't want to get an inverted V. For bearish, you don't want to get a V pattern. We'll talk about bearish another day. But today, because I'm expecting some pullbacks this week, you can look at the bullish flag. Okay. Now, this usually I've never used the simple moving average for 5K plays. I want to see how they are this week. So don't, if you're disappointed with the 5K plays this week, just know I'm trying out simple moving average. I want to see how they are. If they are good, then we can work with them. But we had a nice breakdown. The other strategy, the breakout and the breakdown pattern was the best. And of course, because we were bearish that time. So right now, I'm not getting good setups because we've been bearish for almost 3-4 weeks. So everything is kind of going sideways. That's why I want to use that moving average and see. So let's see how they give us, the setups they give us this week. But the stocks that I've realized, the stocks that are under lotto list, they are the best for swings. They will give you a swing setup this week up to Monday. So every day I'll be adding the stocks that, now this is the reason. You guys know lotto list, the RSI is in the middle. So it can either, you can find a stock either pushing up or going down. That's why the lotto list is the best for swings. So this week, find time to look at those lotto lists. I'll be adding every day the stocks that are either the RSI has dropped or the RSI has gone up to 50, that mid one. And then we see how swing setups are. So if you're a person who does swing plays, look at the lotto list. I know momentum is a good for continuation and pullback. So that's why I'm listing those two this week. I want to see how they play out. this week. Good for swings. Okay, all those, and we have Netflix this week. In that we have SPY there, so it means if SPY is there, we need some tech stocks and major SPY stocks. We're expecting some movements in there. Okay, so last week I know we didn't get a lot of moves because many stocks we had, even if you look at the charts on the daily, we have lots of inside bars and indecisions. Okay, so if you're seeing like here, good example, you're seeing a pole and then you're seeing the pullback is going all the way. This is no longer a flag pattern. Wait for another setup. So this one, it gave you a setup, went up. This is the flag, and then you're expecting a breakout. Okay, so a net, cover, the cost of the PanWs, all the stocks we've looked at, they are possible breakout patterns. So you're looking previous high or using the Fibonacci extension or retracement for exit. So if you want, you can still use retracement. You can draw like this one, the previous high and previous low. So you take your retracement here and then you put 2 points, the high and the low, and then it will give you exit level. So this one, you're anticipating a retest of the previous high and then a breakout. Okay, so you should not worry about exit levels. You can use Fibonacci extension or Fibonacci retracement. Extension means you're drawing these 3 points after the pullback. So here you're using from the bottom of the pole. So you come extension, the bottom of the pole here, the top, the first move, and then the pullback. Then it gives you the exit levels. Okay. Any other question? We'll see one day. We'll talk about daily. Daily now is where you're buying and holding, because the daily flag is giving you multiple days or even weeks of a move, or a week or 2 weeks. Here we're talking about day trading. If you wanna for swing, look at 1 hour, 4 hour for the flag pattern. Irene. Terry, sign
One
us
quick
off.
question.
Oh, okay. Go ahead, T.
All right, so on the 15-minute,
Mm.
what is your entry bar?
Now, 50 minutes. Did you read the article I sent?
I started to read it, but I'm gonna finish it. I did start to read it though.
Okay, let me see. Let me play this. T, on 15 minutes, the entry is very easy on a stock that is giving you a flag. The pullback is barely existing. Okay, so this is the day, was it? Okay, so this is the first move. So it went all the way. This one went here. I don't know if this is we call it the flag, because it went all the way up here, and then we had this move. So when you go to this one, when you go here to the article, now
Yeah.
you're seeing this one. So the breakout, this first candle that breaks out of the channel, okay? Either you're using the previous lower high level, this one here, or if you draw this channel, okay, the first candle that breaks out, and it has to be a bullish candle. Any candle that is above this or the previous lower high level. Now, the reason I'm focusing on 15 minutes is because you can barely see the pullback. It's not giving you this down move for the flag. You can barely see the pullback. That's why it's very easy for 15 minutes even to see the previous day high, the break above previous day high. Okay, the first candle that breaks out of it, you can wait for the pullback and then enter. This is why I'm focusing on the 15 minutes, because it's very easy for entry. You can clearly see that stock when it breaks above the previous day high, if you want to use that. So let's go back here and see. Okay, so this is the previous day high, 317.35, and then pre-market already it was telling you the story. Yeah, I'm going up because it broke above it. So we had this pullback, and then this. So this is the candle that broke, this third candle broke above previous day high. We had this pullback down, and then the candle broke above it. The next candle can be your entry here, 318.61. So use the previous day high, because on 15 minutes, you can barely see. You can barely see. This is not showing you the best, but if you look at costs, you can barely see the pullback. The flag is almost non-existent. Okay, you can see here. Or you can use, after you draw the extension, when the candles crosses above these 23.8. So this is 0, and then this is 23.8. So this can be your entry, and you can see it tallies with breaking above the previous day high. That's what I'm saying. On 15 minutes, you can barely see the pullback. Okay, does that answer your question?
It does. Okay, yeah, because right now, it's broken above the previous day high in the aftermarket hours.
No, this was the pole. This is the day we created the pole, and then this is the next day. If you miss the pole, you don't want to miss the next day. So the next day, because this is 15 minutes, you can use break above the previous day high. So this was the previous day high. This candle, the first candle already broke above the previous day high. You can use the second candle for your entry. This is the day we created the pole. This is the flag, and this is the breakout.
Okay.
So you can use on 15 minutes the break above the previous day high, because the pullback is almost non-existent. Okay.
Okay.
No, I don't feel you're saying okay with confidence. Okay, ask.
Well, no, only because I'm looking at where your, cause I have it on my trading view, and where your indicator is now. I was going, okay, that's the flag, that's the pole. But you're saying that's the breakout.
This is the pole on the 8th. Okay, the 8th it created the pole. This is the flag for the pullback.
Okay.
And then the next day is where now you don't want to miss the breakout.
Okay.
So if you miss the pole, you don't want to miss the breakout the next day.
Yeah. All right. Yeah. I just misidentified the breakout as an actual pole. I got to look at the previous day to see where the pole is.
Yeah. So the previous day you go the pole, this is the flag, and then the breakout the next day. So this breakout, if it's closing strong, you're leaving a runner, and that's why you see all these stocks, the ones that created a pole on Thursday, they will wake up high. So you're taking profit, and then you're leaving a runner.
Okay.
So that one gives you almost 3 higher highs that for especially stocks that they were bearish, that are pulling back, you get your 3 higher highs.
Okay. And you combine that with a 52-week high or an earnings report.
Yes, it's stocks that report earnings. If you have a stock that reports earnings and it breaks out during pre-market, or after hours of pre-market, you want to see if it's going to give you that flag pattern. If it does, you see the pullback is almost non-existent. It means you're trading the same stock the following day for a breakout.
Okay.
Okay. So it's very good to identify, for those people who have trouble, to identify stocks to trade every day. just based on that. So this is bullish, and the opposite is the bearish, which is the same thing for puts. If you're trading, you get a stock trending down, and then you get a pullback for the flag, and then the breakdown.
Oh, you did say, okay. I'm looking at Mindy. I just happened to be scrolling down, but you did say Mindy earlier, because that looks like it's going into that sort of pattern.
Right. Okay. So Mindy, that's something to look at for post ER. So if a stock is pulling back, like let's say Lily, the way it pulled back is because that's why the next day we didn't get a good breakout, because it pulled back to almost 50% retracement. So this is also good for stocks. If you're looking at stocks that are going to report earnings, the day you get the poll, look at the volume. It almost tallies with the volume. You'll see a stock, the volume goes up on the day you get the poll. When you have volume, you're expecting what? Continuation. Okay. So if volume supports you, then now you're seeing here, it went up and then it pulled back. So this was not a poll. It was not a flag. It pulled back almost going back to this. But we got another poll here on this day, and then we got the flag, and then we're getting the breakout. So here you'd have taken profit and then leave a runner. Then you're waking up to money post ER for Mindy. Okay. So identify for pre-ER stocks that usually see them trending before earnings, either they're breaking down or breaking out. You get the flag. Sorry, you're getting the poll. If you get the flag before, then these are the ones possible breakout or breakdown for earnings. Also look at the volume on the day you get a flag. If the volume increases, it means people are getting interested in that stock. That's why you're getting a breakout. We are catching that breakout for a bullish flag or a breakdown for a bearish flag. Okay, Terry.
Yes, Eugene.
Uliniletea nini kutoka Kenya?
Omena, unataka?
Nitumie.
Nakutumia na Royco.
Sawa sawa. Okay, sign us off.
Yeah. Let's make money, guys.
All right, thank you.
Yeah. The market looks good if you can identify those patterns, you know.
Right. Thank you. All the
Thank
best.
you. Thank
Bye.
you.
Goodbye, everybody.